Hey, good morning, everybody. Thank you for joining me. Pre-market analysis and strategy session for today. So let's get into the strategy session really quickly because people tend to trade, and I'm guilty as charged, with emotion, meaning you're watching the market, and as the market's happening, you're like, oh, this is going up. I want to buy calls. And you rush into buying calls and you pay too much money. And then the stock comes back down to possibly a lower point. You're down 15, 20, 40%, all because you are overly aggressive. So I'd like you all, and this goes for everybody, to trade without emotion, to have a complete strategy together. So what does that mean? It means the night before doing your homework, looking at what options you're thinking about purchasing the next day. And when I say options, you could look at like 3 or 4 stocks, something like that. You don't actually have to pick the strike price, the option date, anything like that, but you have to get the strategy set. And I'll bring up earnings, okay? Let's go back to earnings yesterday. Roku came out, they missed, right? Guidance was bad. Roku dropped 20%. What happened? Roku opened at $44. If you bought calls on open yesterday, and yesterday's not even Friday, so it's not even like a lotto play. Calls on open, the ones I was looking at, 20 cents went up to $2.80 per option. So $20 to $2.80, that's a 14-time return. I didn't plan accordingly because I was doing a live stream talking about a whole bunch of other stuff, but those are the options I'm looking at. So I figured this morning, since we're talking strategy session right away, let's get into earnings. Let's talk about which companies reported, what they're doing pre-market, and possibly where they could go today, because that's the same thing I saw with Roku. We know they like to buy the gap. So let's talk about DraftKings first. DKNG, DraftKings, I'm sure you guys can find it on your own. It's down 18% pre-market. Now, I've seen it swing from down 15% to down 20%. What's likely to happen is if the market struggles today, you'll probably see 24% or 25% on DraftKings. Their earnings came back terrible. Their guidance came back terrible. I've told people for months that DraftKings doesn't make any money. Fantasy football doesn't make any money. Well, it makes some money, obviously, because they have a company. But you're talking about the betting, the online betting. That's what's going to bring in most of the money. With that said, let's go on to the next stock, Net. Net is down 12.61% pre-market. Don't want to touch it because it was down 9% to 15. Don't trust it. PayPal, PYPL, again, was down 11% pre-market. It's only down 6% right now. If the market gets ugly, I could definitely see PayPal dropping to that 11 or 12% range. So that is a stock on my radar today because we know people like to buy the dip. So what could happen? Market open, PayPal can go from minus 6%, shoot up to like minus 3%. I get in, then it shoots down to minus 12%. Sounds good to me. That's one of my plans. Carvana, one of the most heavily shorted companies out there. I mentioned it a number of times, down 12.5% pre-market. I could see this one dropping to a 16% pre-market. That's not enough of a range because Carvana options, there's a wide range between the bid and the ask. So you're always going to be paying too much. Twilio, TWLO, big institutionally owned. So it doesn't surprise me when earnings missed that it's down 25% pre-market. All right, because understand, I don't see this one going and bouncing back like an Amazon or Google. It's a more speculative play. All right, next, I probably will get involved with Coin at some time during the day. All right, we saw Coin yesterday. Now it spiked up on open to green. Now, understand, after hours yesterday, it reported and the report sucked and the stock is higher, okay? So Coinbase, which was up to like $61.80 yesterday, and I'm like, holy shit, it turned positive, and they have earnings today, and they're probably going to lose $1 billion like they do per quarter. Now, I don't know if the numbers came in at $1 billion, but what happened yesterday? From 61.80, right? It closed at 55.80. You're talking about $6. You're talking about 8%, okay? It went from being up 2% to down 8%. That's a 10% move in a day running into earnings. Earnings did not surprise in a positive way. Maybe they weren't as bad as some people thought, and that's why the stock is bouncing up a little. But again, I don't really trust Coin. They just pre-market went all the way down to like $55. So if it does pump on open, I'm going to look at some Coin puts. Now, understand strategy. I'm not going to lotto them. Lotto means expiration today, Friday. I say to myself, let's say I get into Coin puts, it spikes on open, and then I'm wrong and it goes a little higher. If I buy options that expire today, boy, am I screwed. So what will I do? I will go out till next Friday or possibly the following Friday saying to myself that earnings will catch up with coin. Now, it happens to also run parallel with the fact that I think the market's going to drop. And I will talk about the SPY coming up. And we're going to talk about SPY ranges and the gap the SPY has to fill. And I will actually show you the charts so you can look at it with me. But I'm really into earnings this morning because there's so much time and way to make money. Square, I wouldn't touch Square. Square went from up 9% to 11% to 14%. Again, if the market struggled today, I could see Square dropping to like 8%, maybe 6%. Wouldn't touch it. DoorDash, speculative play, right? Was up as much as 20% after hours yesterday, then 18%. It's only up 8% this morning. So again, I'm watching the market. The SPY, which is bouncing all over the place this morning. It was up to 374.50 pre-market. Then it dropped all the way to 370. It's sitting at 374 right now. So we can talk about the patterns of the market real quick, and then I'm just going to get into some news real quick to help us process the market. Patterns of the market, okay? When it was outflow and we were seeing the bear market before this latest bull run, okay, 6 out of 8 days outflow. Then what happened? We saw a major run on the SPY from 357, where we gapped up to 364, all the way to 380. 6 out of 8 inflow days. So you had 6 out of 8 outflow, 6 out of 8 inflow. Guess what? We just finished up the next thing of 6 out of 8 outflow again. So that's why I said, and Wednesday was a huge outflow day. When the Fed made its announcement, and Powell came on and was extremely hawkish still, or aggressive, right? The market outflow that day was ridiculous. The Dow went from being up 400 points with 2 hours left to going down 500 points on the day. So it did not surprise me, and I mentioned this yesterday morning, if we saw a bit of a bounce. And then if we sold off later in the day. Remember, I got out of my positions around 12:30 because I said I do not trust the market. Now, I was 3 hours early on not trusting the market because it took until like 3:40 p.m. for the markets actually to throw up. All right, so let's talk about what else is going on. I'll hold off on my trades until I talk right before the SPY, but we could talk about China. So China dumped earlier in the week and then rebounded 3 out of 4 days because there's rumors going around China that they're going to change their COVID policy. Now, when questioned, those people that announced those rumors, when questioned, they retracted their statements. You know, the Chinese government's very strict about enforcing news and who can release news and what. So do I believe China? Heck no. Unless I hear them say that they're literally going to change their COVID policy, that to me, it's just lockdown after lockdown after lockdown. I would stay away from the casino stocks who are having their license renewed, even though, you know, they've been going up. Las Vegas Sands, Wynn Casino. I'm staying away. I don't. So there's stuff that tells me to stay away. Next, we look at the 2-year, the 10-year, the US dollar. I mentioned as rates go up, it puts downward pressure on the market. As rates go down, the market could rise. All right. However, understand that if rates go down, it's because people think we're headed into recession. If we're headed into recession, earnings, sales, forecasting all goes down, the market goes down. So rates go up, market goes down. Rates go down, I'm thinking recession, market can go down. All right, so before I talk about my trades again, we're going to bring up the SPY real quick so we can look at that together and you guys understand why I'm feeling the way I am. So I got my SPY chart up. Hopefully you guys can see my little cursor coming across the screen. I'm sure you can. So I'm going to go back to 2 Fridays ago. 2 Fridays ago, we were at 358 where we closed. The following Monday, we opened up at 364.50, right in this level. As you can see, there was a gap. We gapped up over the weekend. What happens to gaps? They fill. We had a gap here, a gap here, a gap here. It filled, another gap. It ended up filling right here. So this gap is the only gap not to fill. So what happened? We went on a run from 358 on the SPY all the way up to 390, 389, 390, which I said would be resistance. So it does not surprise me that we're down here. Now people will say, okay, that sell-off on Wednesday was too strong. And I mentioned this yesterday that I thought we could bounce higher. that a bounce higher back to 378 on the SPY was not out of, the range of possibility. And that, we'll talk about the SPY in a minute, that brought me into my positions yesterday. So my 3 trades that I made yesterday, first I said, and I was a little late to buy SPY puts on open. So the market opens down, right? Let's just get into the chart again. Let me pull up the chart so we can talk about it together. All right, so the market opened. Let's go to the 3-minute chart. Here we go. So I was thinking about SPY puts on open. The market opened, boom, we shot down, and then I was too late. So when I was too late, I started changing my position and thinking, okay, what kind of calls can I get into? I think we're going to go up to 375. Now, we never went up to 375. At 374 and change, where I saw the market struggling, here's where I sold my positions yesterday. But after I saw this move, I thought 375 would be next, the next area of resistance. Again, because I talk about the numbers, and I'll still talk about the numbers today. But that was my strategy yesterday. When I missed puts on the way in, because I don't like to trade too early, I said, I'm going to call the bottom, and I'm going to look for calls. And then I'm going to go find some stocks that I followed very closely. So I got into some Lucid calls. I got into some Affirm calls. I didn't crush it. I didn't crush it by a long set, but I made like 9% on the small account, which is a great day trade. I also said when the market tops, I'm going to look at AMD puts because AMD was going crazy yesterday. So when AMD got close to the top, I bought a few puts. I made profit as well. AMD went from 61.30 when I went in down to $60.40. Again, a 90-cent move down to the downside, which isn't a crazy, crazy move because we've seen AMD move $3, $4 one way or the other way. But again, sold, secured profit. Why? Because it was a simple day trade. My strategy was to get in at a low point, to get out at a higher point, to look for 10, 15, 20, 25%, and to get out. Now, there are some times when I'll enter into a trade, and I was thinking about entering, I made a Palantir trade, PLTR. When the SPY was at 371 yesterday, I looked at the Palantir options that were expiring today, lottos I called them. I said, very risky. The $8 strike, because the stock was still under $8, I think I paid, $18 per contract. Where did I sell? I sold within 30 or 40 minutes at $25 a contract, making $7 a contract. But if you work out the percentage, you're talking about 41%. So that's what's the most important. Again, trade like a computer, figure out your strategy, don't use emotion. And I'm guilty of it. I'm like, oh man, I should get in this. Okay, I'll pay a little too much. Terrible idea. Whenever you're going to enter into a contract, please nibble, which means whatever you're going to pay, subtract 3%. So I'm eager to get into a contract. I'm like, oh, I'm going to get into this. I'm going to pay $200. Nibble on the way down, even though it's selling for 200, 202, 204. Nibble, take 5% off the 200 and come in and say, okay, why don't I come in at $190? I'll save $10 a contract. I won't have FOMO, or I'll have less FOMO. And what's likely to happen is, even though you get the contract at $1.90, you're still going to be down at some point. I try and call the bottoms when I'm buying a contract, but I'm still not the best. I usually miss by 12 to 18%. Okay, so let's talk about SPY ranges and what could potentially happen. All right, so there's trading today, but I'm going to talk about the ranges zooming out, and then I'm going to focus on today. So again, zooming out, I'm going to bring up the SPY. I'm going to bring up, let's go to the 2-hour so we can see, actually, let's go to the 4 hours so we can see what happened on Thursday. We can see the sell. Now let's go back. Sorry. Okay, here we go. So we can see the sell-off. We can see how Wednesday ended, right? Wednesday ended major selling, a couple of huge volume points. We come to yesterday, again, sell-off at close. Volume was much stronger at close, but understand, that's when institutions trade. Right here, and then the beginning of the day. So right here, okay, that's where you're going to see most of the volume, beginning and end of the day. What happens in the middle of the day is that's why we see so much head and shoulders effects during the day, because the institutions, most of their money is in or out within the first 10 or 15 minutes of the market trading. Most of the institutions, their money is in and out within the last 15 minutes of trading, 3:45 to 4 p.m. So what happens during the day? Of course, there's trading. Of course, there's strategy being executed. But these major moves that we see, you're not going to see a major spike continue by a major spike, and it's going to just go through the roof. There's a spike, there's a retraction, there's a further retraction. We look at levels of support and resistance on the SPY. So I just brought up the chart before. I said, zooming out, I believe we're still in a bear market. I believe that we will gap down, let's see, in the month of November at some point, meaning in some point in the next 2 to 3 weeks, we're going to fill that gap of 358 on the SPY. So 358 on the SPY, we're sitting at 374 pre-market. That's 16 points down. That is 5% down. So now I have my strategy. My strategy tells me, Matt, you're still a bear. Matt, you could definitely see 3 or 4 days of the market going up. So you don't want to enter into a full bearish position. If I'm going to be a bear, I'm going to say, okay, I'll buy one SPY put. Let me go out, a full week or a full 2 weeks. So I'm not wrong as far as timing goes. And then when the market drops, and why should the market drop? Rates are going up, US dollars going up. We have elections on next Tuesday, the 8th. Germany came out with their report. They're basically in recession. China's struggling with their economy. They say they're going to curb COVID lockdowns, but they haven't made an announcement. And we still have the war. No one talks about the war going on between Ukraine and Russia. And I mean, the terroristic acts of what Russia's doing. And now they're just, I can't even talk about that. It'll get me upset. But again, let's focus on the SPY. Okay, so SPY ranges, okay? We're sitting pre-market at 370. Let's see where we are right now, pre-market. 374. Okay, right on the dot. Okay, 374 right on the dot. Understand, let's do bull case scenario, okay? Bull case scenarios, we saw 6 out of 8 days outflow. Wednesday, when the Fed made their announcement in the afternoon from 2 to 4 p.m., we saw the market get crushed and a lot of money leaving the market. So you say, okay, bull case scenario, oversold. That's your determination if you're a bull. It's oversold. We're going higher. Okay. Understand, if you think we're going higher, you're looking at 375 on the SPY. If it holds 375 on the SPY and 375 turns into support, right? All your stocks will show support as long as the market shows support, meaning it bounces off higher off 375. The next number up that you're looking at is 378. Okay. If it bounces and crosses 378 and you're like, wow, this day is crazy, the market has to pull back, but it passed 378, then you're probably going to see 381. Okay. And these are all upside moves. Then you have 385, and then we're back at 389, 390, where we were right before the Fed made its announcement, a few days ago. Okay. Bear case scenario. Bear case scenario is you have all that crap in the world that I said is going on, that most of the world probably is in recession, whether they admit it or not. Earnings are coming back. And I mentioned this probably like 3 months ago that we were going to start seeing this. Earnings are going to come back, and they're going to come back lower. And the PEs of companies are going to go lower, which is going to force the price down lower. It's as simple. It's like the supply and demand curve. Supply, you oversupply, the price goes down. Too much demand, price goes up. That's what short squeezing is about, right? There's no supply, there's huge demand. That's a short squeeze. So the same terminology is used in the marketplace. And that's what we have to factor in. So again, I'm a long-term bear. As far as my strategy for today, for a day trade, I haven't decided if the market's going higher or lower. So let's talk about the lower thing. We're at 374 pre-market. Now remember, the market jumped to 370 right before close, and then it spiked up. And again, we're 374 pre-market. Pre-market this morning, the SPY was as low as 370 again. So don't be surprised if we see 370 to 375 throughout the day, okay? Now, here's the thing. If we break lower, then we're talking about breaking 371 to the downside, and then you're looking at 368 as the next level. Under that, 365. So I'm telling you the next level, because if we break, if you say 370, you're like, okay, we were there yesterday. We'll probably bounce higher, just like we did yesterday. And then all of a sudden you see 369. You see us go under yesterday's low. So yesterday's low on the SPY was 368.79, okay? So the easiest rule, and this is for like new traders, old traders, it doesn't matter. If we break yesterday's low to the downside, and again, 368.79, I would tell myself, which 368 is basically 369. So if 369 gets broken, I'm going to tell myself 365 is in play. So whether it's in play today or not, and again, I already think we're going back down to 358 within the next couple of weeks. I'm going to buy out till Friday. I'm going to look for the best spike I can get in today, and I'm going to buy puts going out. Now, how do I buy contracts? I buy one at a time, because if you buy too many and you're wrong and you have no money on the sidelines, you can't average down. You're like, shit, I'm down 40%. If you buy one contract, and this is rules on my Discord, I listed up. If I buy one contract, I'll give you an example. I'll buy a contract for $200, okay? It goes down 50%. So it's now $100. I buy two more at $100, down 50%. So one at 200, two at 100. That's $400 together. I have three contracts. My average price is $133, okay? Keep in mind, my first buy was at $200. My second buy was at $1. When it spikes back up to like 160, okay? 160, I'm up 25% on all three of my contracts on the average from 133 to 160. However, if I bought two contracts at first at $200 each and I'm in for my full $400 and it goes down to $1, now I'm down 50%. When it spikes back up to $1.60, I'm still down 20% on my full $400 investment. So please, okay, so let's see what we got here. Let's get some questions up. Talk about that. So again, bull case scenario, we could ride back up to 378. Bear case scenario, we're going to hit 358. That's zooming out. Bear case scenario for the day, 368. Possibility if we break 368, 365. Again, my rules for trading my small account. I will not trade before 11 a.m. If I miss a trade, so be it. It's risk versus reward. When I sold my options position yesterday, I secured profit, 9%, done for the day. I didn't have to watch the market the rest of the afternoon. And then when the market tanked at 350, go, oh shit, I should have sold. It would have been so great to sold. And then you're watching pre-market this morning going, man, I wish I had held. None of that wish, hope shit. All right. We make trades. We trade without emotion and we follow our strategy. All right. My question, what's the best strike price to choose? Lately, I've been picking strike price 2 to 3 cents from a break even. Okay. So that's a great question. How do you choose the strike price that you're trading? If you're trading a lotto play, now these are more risky plays, and your contract's expiring today, then yes, I would probably go in or right at the money because you're looking for instant gratification. You're looking to buy an option here, and I'll use Palantir, which is around $8.10. If I was to buy the $8 contracts today, I'm looking for Palantir to go to $8.50. If I buy the $8 puts, again, Palantir at $8.10, I'm looking for Palantir to go to like $7.70 today. I'm looking for instant gratification. However, if I am going out a week or 2 weeks or basing it on earnings, and I'll use my Microsoft example from earlier in the week, I bought a Microsoft option put on Monday. Now, they're expensive. So if you're looking at Microsoft, Amazon, Tesla, Apple, probably less expensive for Apple, but the other ones I mentioned, even Netflix, right? The more expensive the stock, the more expensive the option is. So if you're going in or at the money, you could sometimes pay $600. Whereas if you go in or at the money and you're looking at a Delta option, which has less volatility, which is less of a cost, you're probably like 79 cents or $79. So it's a huge difference, like 7 times the cost. So again, if I'm going to make a trade on, let's say Google, okay, and I think Google is going down per se, I'm going to go out 3 weeks. And if Google's at $96 or $98 or something like that, wherever it is, and I don't know off the top of my head, I can use Apple. Apple's at 140. If I'm going to choose an Apple put, and I say Apple's going to go down over the next month, but I can only afford, like $130 put, then that's where I'd go. Thinking if Apple does go down, I could see 128 on Apple. All right. You always have to have a target price range so you know if your option has a chance to be profitable or not. If you're buying like a Tesla call and you're like, I can only afford the $300 call. Well, shit, Tesla's not going to 300. I don't think it's going to 250. I don't think it's going to 240. 234 has been the max, and at 234, and it seems to draw back. Then I saw 238. But I would never buy a Tesla call if I like Tesla at 250. Not right now, because I based it on the history. You want to make sure that stock or option can hit that level that you're looking at. All right, let's see if we can get another question up or something. Okay. What would I do with a TYD $49 put expiring next Friday? You're in at 375. All right. TYD, let's look what that is. TYD, 7 to 10 year bull ETF. Okay, treasuries. And you're in a put. You're in a put. Well, the good news is the volume the last 2 days has been extremely light. You did see a huge sell-off, obviously, the day that the Fed made their announcement. Let me get into the puts. I don't really follow the treasuries, so you're expiring what day? Next Friday. So, well, they have to expire November 18th, which is 14 days. So you actually have 14 days, Nicholas, because that's the next option expiration. And your strike price is, wait, TYD? Yeah, I'm looking at TYD. It's $28. How do you have a $49 put? I think you gave me the wrong, maybe TTD? Is that what you're talking about? And that's just a guess from me. Trade Desk. Yeah, because Trade Desk is at 49. TYD is a treasury curve. Okay, much better. Thank you for getting that. See, make predictions, make guesses. All right, TTD is the Trade Desk Corp. It's at $50 pre-market. It's up 2%. Again, I don't really pay too much attention to pre-market stuff. Yeah, I mean, nothing goes straight down. Shoot, man. It's, I'm looking at the chart. I mean, I'd be holding. You roll out till next week. Let's see, $49. Oh my God, the $49 put. Yeah, you're in way too expensive. I mean, what did you buy this at? How did you pay $375? I'm going like, you must have been holding this for a couple days because I'm going back to the 5-day chart. $49 put. Oh, I'm looking at the wrong expiration date. I apologize. All right, 7 days out. $49 put. Oh, okay. You're at 385, and that's what it's selling for. 385, 395. You're in at 375. So again, here's what I'm looking at when I look at your chart, okay? Understand, you bought at the very top. So I get your strategy. Your strategy is market's going to throw up. I would like to have 2 weeks on your option, so I might roll it out, or I might have went 2 weeks deep. If you were looking just to make a day trade, I think you're risky because, again, your entry is at the top right here, 375, 380. And again, Trade Desk is up 2% pre-market. So let me just see. Even if Trade Desk goes up today, so you have to understand, if it goes up today, the next level of support that it would need to break is $50.50. That would be my stop loss. If it goes above 50.50, I would get out of it. Other than that, I think you're in good position to hold. Yeah, there was inflow yesterday, but that could have just been a bounce. I don't pay too much attention to pre-market activity. So the fact that the SPY is up 0.6, I don't buy it because I think the SPY could be at 369 at some point today, which is down, or 368 or 367. Worst case scenario, the market sells off 365. So if you say somewhere between best and worst case, it's down at some point during the day, then your Trade Desk stock is going to be down sometime during the day. So if you're looking to get in and out, there's a possibility this one could go to $47 today. And if it goes to 47 today, then it's probably going to get worse next week. So again, I would be a holder of that option. It looks like you got in probably right before close yesterday or something like that. Let's see what other. I've been buying Realtor. Good question. I've been buying $1,800, $19 worth of contracts on SPY, but Tesla's too high. Sometimes, you guys were answering other people's questions. Got it. So let's do one more pre-market analysis at 9 o'clock. Let's just see where everything's sitting at. And again, I'll tell you my latest strategy. So again, this SPY looks like it's pushing higher, 375. Now, if you're on my Discord, I mentioned 375 would have been my exit strategy yesterday. However, if it pushes 375 and 375 acts as support, then you understand 378 is the next level, followed by 381. So say today is bullish. Again, bold case scenario, we could do, I don't think it's going to 381 on the top. You're about a 6-point range here. I would say top for me today would be 378. I've got it circled on my board. So if we hit 378 on the SPY, I'm probably, as long as same thing I told you all yesterday, just because I want to buy SPY puts doesn't mean I jump in at open or jump in when I see the first top. I mentioned on Discord, I was following yesterday AMD and the SPY. And when AMD looked to top, I believe the SPY would top. And that's exactly what happened. So sometimes I use trackers that are associated, and then I use the SPY, and I say, once this tops, this tops. So what you're looking for is you're looking for top resistance. It comes down a little. Then it tries the top again. It rejects the top again, comes down. Once you see a rejection level, that tells you that it's likely to continue. It's the same thing when you see support. You're like, oh, the market found support at this level. When it finds support at that level over and over again, it's called a double bottom, a triple bottom. That tells you it's a safer time to enter. When you think you're calling the top of the market, it spikes. You're like, oh, that's got to be the top. But it's not, because it comes down, then it spikes even higher. You're screwed. You're in too early. You're in before 10:30 a.m. So let's go over timing. This is my last lesson for today, okay? Timing of the market. And I'm going to go through the full day, okay? Pre-market, I don't really care about, okay? I look for news to tell me whether pre-market's true or they're just fluffing it up. Then I look for the first 1 hour of trading. Again, what do we generally see? Volatility. If there's a downward, momentum, what do we see? A spike back up. You're like, oh, the SPY is going to throw up. It's down. Or we generally see lately, because we've been in bear market, the market opens, we see a little dip, then it gets bought up until about 10:30, 10:20, and then we see our first curvature down. And then people say, okay, if it's a bull, it's just going to turn around. So I go 9:30 to 10:30, I'm watching, expecting volatility. Around 10:50 to 11:11 a.m., I use that as my market direction. Wherever the market is heading, if it's heading up, I say, okay, that's the direction we're going to go in today. Again, 10:50 to 11:11, it's a strategy that works for me. Why do I use those times? Because generally at 11:15, there's a reversal. So if the market is going and it's going to be a bullish day, generally at 11:15, it flips. It's a reversal. It's there to fool you. The same thing if we're having a bearish day or a red day. Sometimes around 11:15, or it might be 11:20, 11:21, it reverses itself. So the market, and then you're like, oh, it's already recovering. But no, it's there to fool you, and then it gets worse. So those are the times, 9:30, 10:30, 10:50 to 11:15. There's usually a downtime from 12 to like 1:30. At 1:50, I've noticed some market movement, and generally it's in the downward direction lately because we are in a bear cycle. The same is true when we're in a bull cycle around just before 2 p.m. If we're in a bull cycle and it's a bullish week, the market tends to go up right before 2 p.m. So in a bear cycle, it tends to go down. And then I look at the last 15 or 20 minutes of trading during that day because that leads me into the next day. So the fact that there was a huge sell-off at close yesterday keeps me thinking I'm bearish, even if there's still a dead cat bounce. And that's only because we saw such a massive sell-off on Wednesday. All right, with that said, I'm going to get over to Discord. Hopefully Romeo and Love are chatting it up. Anybody that missed it, you get 7 free days when you sign up. We have a lot of new members. By the way, when you sign up, you have to verify yourself, and then you could reset Discord and you could see all the channels. Some people in the public chat are saying, I can't see any of the channels that you're mentioning, because you have to look at the announcements from above. Carlos posted a message and it tells you what to do, how to reset it so that you can see all the rooms. Because if you're taking advantage of the 7 free days, we've got paid services on there that other Discords charge $100. Flow and Algo, Bullseye. It gives you golden sweeps, things of that nature. You can enter any type of commands you want to see whatever stocks you're looking at and how big money is playing them. So other platforms charge hundreds of dollars, $100, $150. We're giving you that. So please use the Flow and Algos room. I'll see you guys right now. Have a great day.